Traders, I look forward to showing my thoughts and ideas for the upcoming week. Now, the market showed very constructive action last week, shrugging off some negative headlines intraday and reclaiming with firm action, obviously reclaiming as well key short-term moving averages, mostly the 5-day and 20-day about to converge, and very well covered and loudly spoken about last week. The Zweig breadth thrust also triggered for only the 17th time late last week. And interestingly, past triggers have led for the previous 16 times led to an average S&P gain of close to 16.5% over the 6 months that followed, and close to 24% over the following year for the previous 16 times it's triggered. Now, positive internals, price action, improving market structure, and firming above the short-term moving averages. It does make a case for being a little bit bullish in the short term, being net long overall. However, obviously with ongoing uncertainty, some recessionary fears, although pulled back a little bit last week, I still remain cautiously optimistic. Now, what that means is, while I'm looking for risk reward and skewed risk reward on the long side, I'm not chasing highs. I'm not chasing any stocks that are making new highs, that have had significant moves off their 52-week lows without pulling back. Instead, I'm focusing on some stocks that show some relative strength above their 200-day moving average over the previous couple of months, that have bucked the trend, that have outperformed. I'm focusing on those stocks and looking for pullbacks, looking for consolidations, looking for some improving setups over time. And that will then present a favorable risk reward going forward. And that all obviously depends if the overall market can stabilize above these short-term moving averages, perhaps pull back a little bit back into 540s, maybe break the trend of lower highs and lower lows that we've been in, and start to put in a higher low on a pullback above the soon-to-be flattening 20-day moving average and above its 5-day moving average. Then it would be safe for me to believe that we're a bit innocent now, as opposed to guilty until proven innocent, as we have been for the past couple of months. So if the market is able to hold above these moving averages in key areas, namely as well this 550 area of potential previous support turned into resistance, if we're able to now turn this area once we get a higher low or consolidation into newfound support yet again, these are the names that I'll look to express that overall bias in. Starting off with Uber, and again, a list of names, most of them which have bucked the trend and hold firmly above their moving averages, mostly the 200-day moving average for a higher time frame bullish uptrend to remain intact. Now, Uber's obviously shown impressive outperformance for very obvious and several factors over the previous months and year to date. I'm not looking to chase the highs, especially as we came into resistance in the short term on Friday and failed and pulled back a little bit, as well as we're experienced a sharp bounce off of the lows, 60 over and under 80. I'm not looking to chase the highs, so the risk reward isn't skewed by just buying the opening print anymore. Instead, I'm looking for the market to obviously continue to prove itself. And if that happens in the coming days and weeks, I'd be looking for Uber for a potential pullback down into the 5-day moving average, down towards 76, 75, consolidation, higher low, a little bit of compression in range and volume, and then I'd be looking to enter on a breakout for a leg higher. Also key to note that earnings are obviously approaching on May 7th. Next one is Palantir. Just incredible relative strength in Palantir in recent weeks, and it hasn't gone unnoticed at all. Earnings to note, May 5th, and for me, nothing to do right now in Palantir. Again, sharp bounce, 70 back to 112, sharp bounce after consolidating above converging short to medium term moving averages. Great entry when we broke above 98 and 100, but right now, after a nice 3-day consecutive leg higher, there's nothing to do. The risk reward has diminished. So what I'm looking for, similar to Uber, is a pullback, stabilization, improving structure in the overall market, continuation of outperformance and relative strength in Palantir on a pullback, and if we get a similar setup that we saw at its converging moving averages, presenting a nice risk reward, that would be what I'd be looking for another entry for continuation and momentum to the upside. Again, if the market continues to display some improving internals and stabilization. Next one, HIMS, a little bit different to the other two just mentioned. HIMS has earnings on May 5th, and again, like all the names I've already mentioned, I'm not going to be looking to hold a position through earnings. But HIMS is on my radar From a pure technical analysis perspective, I like the risk down here as we're consolidating right at a 5-day, right at a 20-day, and a 200-day moving average. And so I'd be open to a long above last week's high if we break above 29s. And in that case, I'd be looking for potential covers into first area of resistance as we come into 30, 50s, as we come into a potential area of overhead resistance. If we fail, I'd be open to covers. If we hold above and stabilize for a day, I'd be looking to add to my position, start trailing my stop at the low of day for a multi-day move towards next area of potential resistance and a 180-hour measured move from 30 towards its 100-day moving average, 33-ish, give or take the next area, and R2 in HIMS, and looking to trail with low of day. Back to names that have shown relative strength. Spotify, one of my favorite right now. Fantastic relative strength. Of course, major tariff resiliency. And again, nothing to do right now. Patience pays. Given the move from sub 500 now to over 600, certainly not looking to just chase the highs. We've already had an incredible move over under 500, now back to 600. The risk reward isn't there. But if the stock is able to spend a few days consolidating, tightening right at 600, right near the recent pivot swing high and resistance area, if we're able to consolidate and spend a few days going sideways, that's where I would look for a potential breakout long and look to trail my stop with a low of day trail for a multi-day move. I guess before we go to a small cap, we can talk about some additional names on watch, some large caps that have also displayed relative strength that I'll be continuing to watch going forward for improving market structure. AXON being another one, Rocket Lab as well, bounced off of its 200-day convincingly, filled the gap, bounced, wasn't able to hold below, and now we find ourselves above all but one key moving averages. Celsius is another name. On my radar, TGTX is another name. Meli, leading Latin American name, another name on my radar that I'm just keeping tabs on going forward. Robinhood, Roblox, just a bunch of names that I have alerts in and I'll continue to monitor in the coming days and weeks. EAT, and lastly, Boston Scientific. And now shifting gears to a small cap to round it up. So OMEX is obviously a part of the rare earth minerals theme. It's been a fantastic multi-day mover. We haven't seen one with high volume over multiple days in quite some time, given the market environment that we've been in. But it had a really nice blowout into the 180s on Friday, followed by some failed follow-through intraday near 160s on multiple attempts and fail, and then got back below VWAP and a nice sell-off on the after hours. So for position to short, I need to see any push towards 140 potential support turned into resistance in the days to come, 140. And if we fail there, I'd look for a short intraday below 1 potential multi-day move. Alternatively, if we're able to get back into the sort of developing 2-day VWAP and into that 160 area between 150 to 160 and maybe a quick intraday blow off of stubborn shorts close to 170, leading to a lower high and fail, that's where I'd be open to a short intraday with the high of day stop targeting a move back down towards low ones, coming back into this 120 area, day one high, and where we failed and traded down to in the after hours on Friday, targeting a move into 120s, and then looking to trail just on a 5-minute lower high time frame. But importantly, if it does just consolidate for multiple days on declining volume, without an offering, without a catalyst, and we really just base above between 1 and 130, 140s, it'll be off my radar. That might open up the possibility of a potential short-lived liquidity trap. So then I'll just avoid it completely. So I'll have alerts set and I'll turn my attention to it if we do come into any of those ranges for potential failed follow-through and a lower high short setup. So that's everything on my radar. A lot of names that don't warrant any action right now from my side, but a lot of names I'm going to continue to just stalk and watch going forward for potential continuation in the weeks and days to come, all dependent on the overall market environment. But what I do like is how we've shrugged off some negative news, and we've seen some really major, most recently on Friday, intraday recoveries towards the highs intraday, which has been a shift of character completely when we've been able to shrug off some negative news and headlines. So I like that. I like the improving internals, sentiment, price action, and obviously trading above key short-term moving averages. So all of that opens me up to the possibility again of looking for some swings mostly in names that have displayed relative strength during the most recent correction, that have consolidated and based above its 200-day. So we'll see if we get further outperformance if the market continues to stabilize. Again, it's a big if, and only looking to act if we get tightening of range and volume, leading to skewed risk reward again for leg two hires, second leg hires. So with all of that being said, drop your thoughts, your comments, your favorite views, and stocks that are on your radar in the comments below. And I look forward to hearing from all of you as always, and I'll see you all next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.